Welcome to the Jay Kim Show. This is your host, Jay Kim. I am an investor, author, and fitness entrepreneur, and for the first time in Asia, I sit down with the world's most brilliant minds in business, investing, and entrepreneurship. You'll learn all the secrets, strategies, and formulas to becoming a successful entrepreneur directly from the masters. If this is your first time listening, thank you for stopping by. This podcast is produced every week with the goal of providing actionable insight to you, the listener, with every single episode. And now, on to the show. Today's guest is Alan Chen. Alan is the founder and managing partner of Vectr Ventures. Vectr Ventures is an early-stage investment fund that he launched in 2013. They are Hong Kong-based, and he focuses on some cool market sectors such as fintech, data analytics, VR, and med tech. So for those of you who are familiar with the startup scene here in Hong Kong, you've probably heard of Alan. He's quite famous. He won the Angel Investor of the Year award in 2015, along with Sequoia and GSR Ventures. This episode is for startup founders because we talk about specifically what he looks at when he invests into startups. So make sure you're taking notes. Let's jump right into the show. All right, Alan, thanks so much for being on the show. Why don't you just take some time to introduce yourself to our audience? You're quite well known here within the Hong Kong ecosystem, but for our listeners abroad, maybe you could just run us through who you are and what you do.
Sure. Thanks so much for having me. I wouldn't say I'm famous locally or anywhere, but I run a firm called Vectr Ventures. We invest in early stage technology companies across the globe. And early stage, we pretty much call anything from, angel or seed round all the way up to Series B. We still look at. And so we try to take, a slightly more hands-on or different approach to investing at early stage. So we jump in on, business development, product, and really just try to be helpful to our founders after we invest. And so, we're structured in a way so that our company can work with our portfolio companies freely from, like I was saying, from product design, product build, business development, sales, expansion in Asia, and we really try to get in there to help them on, whatever it is they need and to be their first call whenever a problem needs to be solved versus, calling us when it's trying to put out fires. So we try to get in there early and try to build good relationships with our founders.
Right. So, and it's Asian focused fund, right?
Well, we invest everywhere right now. More than half of our portfolio is based in the United States. We've got around a quarter of our portfolio based in Europe and another quarter based around Asia Pacific. And so we don't really mind where the company is from, but at the end of the day, we try very hard to see what in our network and who in our network can plug into our invested companies. And, we try to be the voice of reason when considering expansion into Asia Pacific, either, in proper and steady strategic planning together, or to be the voice that tells them this is not going to happen. Asia is not one place, and this is going to be a lot harder than you think. And so, not always good stuff, but we try to be there to be realistic.
Yeah, no, sure. I think that there's definitely a need for investors such as yourself. I mean, there's a handful of guys that are kind of trying to accomplish the same sort of stuff, and especially for startups that are not based regionally, and they're based whether in Silicon Valley or maybe abroad in Europe or some of the other ecosystems. China is always on their radar, so to speak, and so is Asia. And a lot of times they try to charge in prematurely, or maybe they don't have the resources or a partner for that, and they end up being out of business within the region in a year. So there's definitely a need for a firm like yours. So how many people are on your team now?
So right now our team is up to 15 full-time, but we have a few venture partners and advisors that are spread out around the world, and we keep in close contact with them as well.
Okay, wow. And you only started this firm in 2014, is that right?
Yeah, we started in the summer of 2014. the idea of it came around then, the name and whatnot, I think came around June, if I remember correctly,
Mm.
something like that. And so, yeah, we started around then. We moved into, our office here in Hong Kong near the end of November 2014. So almost 2 years now.
Almost 2 year mark. Yeah, and you guys have beautiful office space there. I've been there personally, and I love it. So why don't you talk? Can you share with us a little bit about your sort of before you launched Vectr Ventures? What were you doing, and how did your prior experience lead you down this path?
Sure. Coming to tech, I think for me, back into investing was very full circle. So I first applied to university for information systems in Carnegie Mellon for early decision, but I got deferred, didn't get in. So I ended up going to a different school and studying political science, philosophy, and economics, and just went a
Mm.
totally opposite way. So early, very early love for technology. Going through high school during the first tech boom in year 2000, right? And when we were
Right.
weighing everything by clicks. So even back then, with my family and some of my family friends, seeing them involved in the space, I was very into it very early. And so, I ended up going to Duke University, studying all that, came out, was an investment banker based in Hong Kong and China for around 3 years,
Mm.
just doing a very typical investment banking. And then after the financial crisis, I left in around '09 and then went to Shanghai and joined a company that was founded by my then chairman and now a good friend, trying to build a amusement park in China for children. And
Oh,
so, I
interesting.
joined in there as a product manager and helping sort of plan out the program that's inside. And program meaning, the economy and how the game works once you get into the arena, and not so much, a computer program. So did
Right.
that for around half a year or so until we realized that our property wasn't going to work out. So investors and whatnot pulled out, which was very unfortunate and heartbreaking for myself. Being in the first time I jumped into a company is so gung ho, right? So
Yeah.
it's a bit painful. So that didn't pan out as we wanted, which was unfortunate because I still love the product to this day,
Hmm.
even though it's not a tech startup per se, like the way we see it.
Right.
So after that happened, I moved back to Hong Kong and got a bit involved with my family business. And so we were just, I was looking at real estate and some just general investments across the board for alternative investments. And
Hmm.
probably within a year or so, this was around 2010, got a bit antsy, well, very antsy, and then moved to China with my then co-founder and started a company called IPL, which was doing ticketing and entertainment in China.
Right.
So it was a bit like Fandango, Ticketmaster,
Hmm.
and maybe like E! Online and some other
Mm.
entertainment news site all rolled into one product. And we did that for around 4 years or so before we sold that to a Chinese media conglomerate early 2014. And in the
Nice.
meantime, yeah, thanks. In the meantime, I was working on a few things as well on the side, which sort of led me to what Vectr is now.
Mm.
So what happened was, in the meantime, once I started that, got back in touch with the tech world, and with my investor sort of mentality too, just started looking at a lot of early stage technology companies, from all over the place, just through the network. And I started taking a look, and this was around 2011, maybe. So, as you probably know too, around that time in Asia and this part of the world, there wasn't that much tech
Right.
investing or tech talk going on. I think most
Hmm.
people were still reallocating their resources back into the world right after the financial crisis.
That's right.
Right. I ended up, just through drinks and different things, talking to my ex-bosses, ex-colleagues, some of my, my buddies, like mentors and advisors or whatnot at the time, and sort of friends that have worked a little longer than myself, just saying, hey, I'm looking at this stuff, seeing these really interesting companies, and I'm going to put in some money here at a very early stage. And one thing led to another, and eventually I pretty much started running a private syndicate there with
Right.
around a dozen people, 6, 7 deals later, just with people that found it interesting. I didn't charge anyone anything, and we were just investing together as a club.
Right.
So it was great. I got to learn a lot about talking to founders, doing due diligence, learned how to live my life around Pacific time in Hong Kong.
That's right.
right? Which is still a big part of our lives now. Early in the morning, late at night, I'm usually on the
Mhm.
phone, and just started looking at companies and having people invest alongside me, which was a really good experience because it taught me, a bit of responsibility. It taught me how to, really think through things and present it to others, and so we did a few investments like that. And I also tried to launch another company in the middle that was trying to be a tech platform
Mm.
for NGOs, which was an NGO itself. And so that's how I met one of my team members now. My VP of technology. That's how we met back then.
Ah,
So we started building this platform. And by the end, when I sold, IPL, like full circle back to IPL, and I sold, I had a good think. Just spent some time after that to have a good think about what it is that I want to do. I think from being part of a big company to being part of a family business to being part of somebody else's business to running my own business.
mm.
I really feel like it was and running like a private syndicate. It was a sort of a quick sprint in a few years, I would say, to go
Yeah.
through a good amount of experiences. So I was able to draw on that and just think to myself of, okay, like what do I like here? What are the things that I'm good at? What are the things that I'm not so good at? What are things that I actually can do? What are things I can't do, no matter how much I like it or whatever? And spend some time to just think through everything, and sort of ended up with the beginning of Vector.
Yeah, that's awesome. And you guys have the speed at which after you sort of did your thinking and whatnot, the speed in which you guys, it's 2014 to now, the impact and whatnot in the marketplace, like it's quite impressive. So congratulations on that. And going back to what you were talking about the syndicate, now how was that? How did that actually work? Was it just like a club thing where people would bring deals to the table and everyone would take a look at it, and if you want in, you want, or was it actually more formal where there was a pool of money and it was managed like a fund?
It was actually more casual than both.
Mm,
We just did companies back then. I mean, I didn't go through a proper fund structure, any of that. And I was the only one suggesting and bringing the investments and deals. So, we would just be in contact all the time. And whenever I found a company that I would really like, I pretty much would just copy and paste all my notes into an email and tell everyone,
right.
this is how much I'm putting, this is how much we can go up to, this is the timeline, this is what I think. And I usually ended off the email. Eventually started with it saying, "If you're not interested, please don't ask me questions, and you don't have to write me back." And we just started holding companies in just random BVIs and whatnot, and then
Hmm.
I would just parcel it out that way. I mean, I only did those investments with people that I really trusted.
Right.
I mean, I joke around saying I only co-invested with people then that I knew where they lived, so I could just stand in front of the front door if
Yeah.
in case anything happens, and vice
Exactly.
versa. And so we
Yeah.
kept it a very tight group, and we did it very informally. Really, it was a lot of it was based on trust, and it was really good. And I'm very thankful for all the friends that sort of joined in with me at the beginning, and luckily many, if not all of those investments we made are still around right now. So,
Did that portfolio eventually fold into Vector, or is that completely separate?
yes, I did hold it into that.
Okay. So the interesting thing is you were able to somewhat have an education because of this syndicate that you ran, which I think is great because basically angel investing, for people that don't know and want to get into it, it's basically like throwing your money in the trash can. I mean, I've been an angel investor in the past and I've lost a lot of money in the past. And I realized, you know what? And the biggest thing is actually time, like the time, like you said, the conference calls and the due diligence that you have to put in to actually meet these companies and get to a level of comfort where you can actually, you can feel that it's going to be successful. And then taking that one step further is now what you're doing at Vectors, where you actually provide resources in addition to money to ensure that it's kind of like an insurance policy on your investments. Like I'm going to help them take it to the next level, right?
Yeah,
So
exactly. I mean, our whole mentality is the way I describe it. It's also sort of I try to keep it lighthearted, but this is honestly how I feel about it is everyone's worked very hard for their money, so I'm not totally into just signing over a check and saying good luck and waiting for it to
Hmm.
come back. It may not be the best that I get involved and be hands on, but and you never know, right? Even companies I really like sometimes, and I try to be very helpful. If it doesn't work, it doesn't work, and some that you do nothing for actually go flying. But we try to mitigate. I call it mitigating risk, really, to see
Hmm.
how we can help the best we can to allow the founder to do as much as they can, so that everyone's happy at the end of the day.
That's right. And interests are aligned for sure.
Yeah, we
Um,
hope so.
yeah. So I want to talk about Hong Kong for a bit. And you're from here, so you've seen the ecosystem here evolve. When I moved here in '05, and there was virtually nothing, like you said. And around 2010, 2011 is when I as well noticed and observed the sort of uptick in activity and interest in early stage investing. And then now, fast forward, 5, 6 years, here we are. However, I feel like there's still a long way to go here within Hong Kong, especially. I think there's other ecosystems within Asia that are more advanced than we are. So, what do you think the largest challenge that we have here in Hong Kong is, and what will it take to get our ecosystem to the next level?
Well, it's sort of two-sided. As far as the ecosystem goes, what people perceive as our weakness, in my opinion, is also our strength. And what does that mean, right? So I personally am a strong believer in the private sector and the private sector driving sort of business and innovations and things forward, which I would say not all other comparisons we have in the region are that way. And the perils of having private sector drive something sometimes is it goes slower
Mm,
and people are a little more cautious, and it just takes time, right? Because especially in a place like Hong Kong, where in our previous lives, I mean, all the different ways people can monetize, invest, and take care of their wealth here and take care of their cash and investments, it makes something like early stage investment and tech very related to how investors are feeling generally, which means is it like bull market, is the market riding high, is property riding
mhm,
high? And if it
mhm.
is, then everyone's got a little more spare money because everyone thinks everything is all good.
Right.
But you know, on the downside, like where we are now, where the world is a little shakier and everyone across the board is being more cautious, then it makes it a little tougher, right, in the ecosystem. But I think as far as companies and what we've noticed over the past few years is we've seen a lot more companies now, if not all of them we see, directly tackling a problem and building a product out of their own insights and out of their own experiences. And so at the first wave, we saw a lot of copy A, B, C, D, E, F, G to Hong Kong
Hmm.
because it works somewhere else.
Hmm.
And as far as we've seen, that doesn't always work. No matter if you copy to China or copy it to here, like some work,
Right.
some don't. And then we eventually saw a group that was doing that, but then with slight local twist, like with a slight Hong Kong angle, and they have to change it up because people then realize, okay, this doesn't work. Hong Kong doesn't have the same issues as like the Bay Area. I
Right.
don't need everything delivered to me when I can just walk downstairs and pretty much buy anything that I want within 5 minutes. And 90% of the population in Hong Kong lives in that circumstance, right? Like you just go
Yes.
downstairs, so
That's
it's
right.
not a big deal. But now, what's really really comforting and really sort of inspiring and great to see is that more and more teams and founders, have done it once, are building something again, and maybe really allowing people to sort of reach and say, hey, I want to do this and solve this problem, and I don't care if it's done somewhere else necessarily, and I'm just going to do it. And I think that's been a really good, sort of a nice progression over the past few years.
Yeah, that's interesting you say that. It's I think part of that is maturity of the market as well. When founders, like you say, they've failed once or maybe they've had a couple different ventures and then finally they're like, okay, we don't need the Uber of Hong Kong. We don't need the Postmates of Hong Kong. We need to build something that is for Hong Kong, right?
Exactly, right? So if you think about it, I tell this to my team sometimes. Chances are, no matter what you do, it's not going to work anyways, right? Statistics say. So
Yeah, right.
you might as well swing for the fences, right?
Yeah, that's right. That's right.
Yeah, so that's how we
That's a
think.
good point.
Yeah.
So let's talk about let's talk about what every founder that's listening to this or is going to be listening to this wants to hear. They want to know they're a young aspiring founder. They're thinking about launching a company, or maybe they've already launched a company and they want to get money and they want to fundraise, and they want it from Vectr Ventures. What type of companies do you look for? What do you specifically look for in founders, in companies, in entrepreneurs that you will back?
Right. So let's start with, seed stage and very early. A mentor once told me for very early stage companies that never fall in love with a product or never fall in love with a specific pitch and the specific problem that, or a method in which a team is solving a problem, because especially if it's consumer, but it really doesn't matter, because if that's wrong and you bet on the product then and versus the team, then you may be in deep trouble, because who knows what the market really
Hmm.
picks up. So what I was taught very early on was, make sure the team gives you the confidence that they can sort it out and they will figure it out, and they'll battle and fight till the end, to make
Right.
sure that they can fit into the market. And so very early on for us, big thing for me, for founders, obviously, is a bit of pedigree of past experiences, what they've done before, and part of
Mm.
like why you, of all people, because any sort of idea that you can come up with, I'm sure at least 100 other people have thought about in the world. So
Right.
why you for this problem? And
Mhm.
so secondly, I'd like to take a look at founders to see in their vision of where the company is going to go. I like to know that they're very clear in terms of what they're good at and what they're bad at, and how this is going to happen. And what does that mean? Not in like showing me like huge projections and the company is going to be worth like $1 billion in
Right.
like a few years, but more of, so how are we going to use this capital? What is this going to do? What are we addressing with this time and capital for this seed round? And to really give me a sense that they know that this is the beginning and this is like an uphill battle, if not the steepest part right now. And I really need to get comfort that the founder has thought about that and realizes that too. What I'm most afraid of is the feeling you get when founders get a seed round and it almost feels like they already won the entire battle, like they won the
Right.
entire war, right? Which is, you're not even like in the first battle, you're just getting ready for the first battle when you get
Yeah,
this seed.
you're warming up.
Right, but there has been, which is hard, right? Because the thing with growth and like fast growth in ecosystem is, there are a lot of different peripheral, events and all types of things that happen, and inadvertently, there are times when I think some founders get carried away
Mm.
and spend their time doing things that are really not that important. So we like to tell our founders, other than if it's an event which borderlines on a trade show, which allows them to grow their business, which gets them in touch with people that they need,
Right.
we tell them, like, don't talk about anything. Don't go on panels. Don't go talk about entrepreneurship because you just started anyways, and just go to work, build your
Yeah.
product, go get the market, right? Don't waste all your time doing these other things. And so I really like to get a sense of how these teams and like how they work together, and how the leader or leaders of the team are driven towards actually achieving their goal, and not being too distracted, right? I mean, I'm sure you've seen too, there's some companies sometimes there this pitch competition, that pitch competition, like
Mm.
there's so many different competitions, and sometimes I'm just wondering,
Where's the focus, right?
yeah, like, why are we doing this? Or
Yeah.
I saw you pitch like a year ago and you're still at a pitch competition this year. It makes me ask a lot of bigger questions other than about the product and the company. I'll be asking more questions about the founders. And at that point, um, that's an uphill battle for a company. And I think any investor too. You want us to be focused on the product and believe you and the plan, versus asking questions about you.
You right. Right. There should be no questions. There should be 100% confidence in the jockey, so to speak. Right.
Well, yeah, exactly. I mean, I just want to be clear of your plan. And I mean, yesterday I was talking to a founder, and he's like, "Well, I thought rounds should be this size, and investors like to do it this way, so I didn't want to step across the line." And my point to him was really like, "Look, don't listen to what other people say, right? I mean, it's like writing an essay in school. You tell the teacher why what you write is important.
Mm,
You don't wait for her to tell
mm.
you what is
That's right.
important." I
Yeah.
mean, if that was the case, then like you're not going to get the top marks. You're not going to get because you didn't. There's nothing new. And so I told this guy, look, you just go back and think about how much you need, but you need to tell me what that does for you and what that does for everybody. And if you can clearly depict that scenario, then we can talk about anything.
Right.
It doesn't matter, right? Don't play within a box, because at the end of the day, there is a lot of standardization in sort of what we're doing now, but every business is different, every team is different, all investors are different. So what's important is you as the founder, you convince me what is happening, and then I'll decide if I agree. But don't just do whatever I say, because then, I mean, the only difference between us and you is that I chose not to do what you're doing, and I chose to
Right.
do what I'm doing, which is
That's right.
why would I invest in you at that point?
Yeah, yeah, that makes sense. That makes sense. So are there? Can you give me like two or three of the startups that are in your portfolio? Maybe let's say I know you're global, but let's say Hong Kong companies that you're particularly excited about at this point.
Well, one company I'm very excited about in Hong Kong is Day Day Cook.
Yep, Norma. Yeah, she's great.
Yeah, she's great. She's amazing. One of the founders I say I have to worry the least about. She is doing super well. Broke 100 million plus views in the past few months, and she has really come a long way since we invested in her. And she's grown her platform a lot, tons of fans, even to the point where someone stopped her on the street in Shanghai and says like, "Hey, I know you," which is sort of crazy if you think about how that works nowadays, right? And it's that one has made me very proud, and we're very happy to be part of it, especially talking to traditional media and whatnot too around town
Mm,
and in different regions. It's just really interesting to see of, oh, like how are they doing? Isn't that cooking company blah blah blah? And then you give them the statistics, and the room sort of goes silent for a bit,
yeah,
which is very
in awe.
satisfying for us. And we're like, yeah, that's right.
Yeah, exactly.
So Norma and Data Cook, we've been very excited about, and we're working with her to hopefully come up with a lot more exciting things in her business. And that one, based out of Hong Kong, is something we're very, very happy to be part of. And for many in Hong Kong, they probably never even heard of Norma, which is sort of what we like, because she
Yeah,
doesn't run around doing things. She's too busy working. She's the type, if you
yeah,
ask her, can you come on a panel? She is kind of going to turn you down because she's too busy and will be asking you, what am I going to get out of this? What does
yeah.
this do for my business? And if it
That's
doesn't do
right.
anything, I mean, she's out. And that's one thing that we love about her.
Great founder. She's crushing it, and fortunately, she's agreed to actually be on this podcast as well. So I haven't booked her the time yet, but because she's probably too busy working, which is good news for you. But yeah, I mean, I know Sam as well,
Yep.
so I'm really happy to see her
Yeah.
success.
They're great
Um,
entrepreneurs, frankly speaking.
yeah, yeah, awesome. So, listen, we got to look to wrap up. I really appreciate your time. I have just two more questions for you. So, the first is, what is one final piece of advice that you can give to aspiring startup founders, or maybe people that actually are working at a startup right now, looking to for some growth, looking to get the next round of funding? What's one piece of advice that you can give them today?
I think the most important thing is to be clear. I mean, meaning be clear about your plan, be clear about why you're heading towards your milestone, and be clear and honest to yourself and to your prospective or existing investors about, what the roadblocks and what the difficulties will be. Because, nobody believes that nobody believes in the entire projected plan ever anyways, because that's just not how everything works, I suppose.
Right.
And so what I think is really important is, make sure you stay honest and well planned about all that, and make sure that we have one company which we really like the founder of too. super hustler. But what he does is at the end of every month, he'll send a very simple email. Just, hey, this is what we've done. This is what we're doing in the middle of. These are things what we're having trouble with. And we'll send a very short list of, these are things I need help with from whoever is reading this email right now. It's just, the investor group, but very open to constantly be saying, hey, I don't know how to do this. And hey, I'm having trouble with this. And just, we're invested or want to invest. And so we're there to help. But, there's a lot of times that I think founders don't open up as much as they want, as, at least we want them to. And I would say just stay active, stay focal, and stay well planned. And when you talk to investors, make sure that you convey that so that we're debating parts of your plan, but we're not crafting the plan and the vision with you. That would be, I think, something to take for everyone when talking to any investor.
Great advice. Great advice, Alan. Thanks for that. Last question is, where can people find you, follow you, and where's your homepage?
Yeah. So, different members of my team, we're on AngelList, Twitter. I don't post much on various different accounts, but I sort of retweet interesting articles here and there. We have a Vectr Ventures account too on Instagram, Twitter, and whatnot that you can follow, and Facebook as well. And our website, you can just search us, Vectr, VCTR Ventures, and we should pop up.
Awesome. Great. Thanks for your time, Alan. I really appreciate it, and I enjoyed the talk today. Best of luck with all your portfolio investments.
Thanks. And, for your podcast too. Thanks.
All right. Thanks.
Bye.
I hope you enjoyed today's episode. All the show notes and links can be found over at jkimshow.com. Come back often and make sure you subscribe, rate, and review. Don't forget to join us next week for another exciting episode of The J. Kim Show. I'd love to hear your comments. You can find me on Twitter at jkimmer, JAYKIMMER. See you guys next week. This podcast is brought to you by Hack Your Fitness, the high achiever's guide to getting ripped in under 3 hours a week. If you're anything like me, you're probably working a full-time job or jobs and trying to find time to balance family life, social life, and last but not least, fitness. Look, I get it. I'm a full-time investor and entrepreneur myself, and father of two. So how am I able to stay fit year-round without spending hours and hours in the gym killing myself on the cardio machine? After struggling for the last 15 years trying every workout and diet under the sun, I finally designed a system that allows me to achieve and maintain single-digit body fat for life in under 3 hours a week. Cardio not required. Head on over to hackyour.fitness and download my free 13-page guide that teaches you the simple science behind efficient fitness and smart nutrition and gives you everything you need to know to finally take control of your life. That's hackyour.fitness.